Well, I have a special guest for everybody this week. I wanted to bring on Michael Schmidt of Fair Free Digital. As you guys know, I'm a big proponent of measuring the Bitcoin cycles by blocks, not so much by time-based. I personally haven't had the time to do a block-based analysis, but Michael has. Is a fantastic breakdown. So I wanted to bring him on and have a special video, special session with him to go over that analysis that he's done. Now, before we get into this, as usual, I don't think Michael's a licensed financial advisor, and I'm certainly not. So please, anything that you hear here, this is just our opinion, our observation about what we see in the markets and our observation in general. Please take this for what it is. And if you were to, of course, make any trades or buy anything blindly based on things that we discussed here today, you're going to end up losing all your money and living in a van down by the river. Now, with all that said, thank you, Michael. Michael, do you mind introducing yourself a little bit?
We met in the CTM community, which has been awesome. We've got a lot of really smart people there doing a lot of really good work. And I think price by blocks was something I started looking at when Jordan and the Root were talking about it. And what I was hoping was that those blocks would line up and we'd get a really nice, just clear date to, okay, on this block we sell and we're done. We all go home and we buy back at this date and we ride it for the next cycle. But when I did that, that didn't happen. So what I did find was a lot of interesting stuff. So we could actually dig into that just a little bit, ask some questions.
That's a pretty chart. Yeah.
Yeah. So we're familiar with this 4-year cycle model that Ted and Ian have drawn up and kind of got some color direction from Jordan and some input there. And Jesse, obviously, I don't have the names down here anymore, but we're familiar with this and like you actually look at it now and you're like, maybe it won't be priced by blocks, but the markets have a funny way. Nothing goes up except for Bitcoin sometimes in a straight line. But we did have this mid-cycle top here. We consolidated for, I would say, longer than we thought. And yeah, so the price by blocks makes more sense to me just because I don't see any reason that Bitcoin would care about date time. Whereas every block, you're issuing coins to the miner, newly minted coins to the miner, and that's bringing more supply and inflation into the market. So I wanted to go through that. And I have my paper right here. And if we just get into it real quick, I don't think you or anybody in CTM are going to have questions about the 4-year cycle as a whole. So we can actually skip through it, but Misconfig obviously doing some good work here. I have the Federal Reserve's balance sheet. I like the Federal Reserve's balance sheet chart almost more than I like the chart of Bitcoin when I'm making long-term investing decisions, because if Bitcoin, yeah, I know, if Bitcoin is
very simple, but yes, it works.
Yeah, if Bitcoin's a measure of value, you would tie that very closely to what the Federal Reserve and other central banks are doing in terms of currency debasement. So while Bitcoin has its own adoption that is happening, there are much bigger short-term moves happening in the Federal Reserve balance sheet cycle that we can kind of also take advantage of and kind of help guide us to how big we expect these moves to be made. So I'm not going to bring up the Federal Reserve balance sheet on TradingView, but so far the expansion of the Fed's balance sheet this cycle is the longest or the largest that has ever happened. So the other largest was what took Bitcoin from not having a price to like $32. In 2017, we had tightening. And in 2013, we had the second largest expansion of the Fed's balance sheet until obviously this expansion, which has been just unreal. Yeah, and when I say expansion, I'm talking by percentage, not just nominal terms, right? Because this is a log chart. So obviously it would always be more each QE.
I was about to say, that's a log chart. That makes a lot more sense. So I'm going to just real briefly, I'm going to put Michael's Twitter account in the video description, but it's Fair Free Digital, spelt just like you would think it's spelt on Twitter. I'll put a link to this. Can I put a link to this document in the video notes Michael? Or
So you can if you would like, but if they just go to my Twitter, it's a pinned message that'll take you right to the Google Drive. It'll take you right here.
perfect.
So you
We'll
can
leave
get
it
to
with that.
this right
We'll
off
leave it
my
with that.
pinned.
I'll put a link to Michael's Twitter profile and a link to this thread related to this on there. On the 4-year cycle, while I think the majority of the audience is CTM, there are a lot of people that are actually non-CTM that are listening to the channel for just general advice on altcoins and other cryptocurrencies. So when we talk about the 4-year cycle in Bitcoin, just in case you're not familiar with that, if you're just an altcoin junkie, what happens every 4 years in Bitcoin is the miner reward gets cut in half. So initially when Bitcoin was first stood up, there were 50 coins per block, and a block is about an average of about 10 minutes. Now it's completely random based on physics. Some blocks mint seconds apart from each other and some are an hour apart from each other. It just totally depends on how long it takes the miner to find the hash value that's necessary with the number of leading zeros, right? So, but every 4 years, roughly, or 210,000 blocks, more precisely, Bitcoin cuts the supply in half. So it went from 50 to 25, then to 12.5. And so it continues to get cut in half. And so that's what happened in March of 2020. Was it March or May of 2020, Michael?
It was May 11th of 2020.
May 11th of 2020, the Bitcoin network cut in half the reward to the miner. So the inflation rate of Bitcoin got cut in half on that date. And what's happened the last several halvings, every time that happens, is there's a very strong price increase about a year and a half out roughly from that. Or a year to year and a half, there's a very big move in Bitcoin's price. So that's what he's describing here. I probably spent more time on it than you expected, but there are a lot of altcoin junkies that do visit the site. I want to make sure they understand that before we go any further.
Yeah. So I guess I also kind of have broken the 4-year cycle down a little bit more granularly, right? So I kind of define what happens after the halving as a supply shock driven rally, which leads to a mid-cycle top, and that comes into your mid-cycle low, which if you go and you look at Misconfig's work on the golden ratio, this link will actually take you right to it. It has a really good, very detailed breakdown about how we always hold the 1.618 fib retracement line of the previous cycle top. And then that disbelief rally that comes from this hold leads to our mania phase, which ends in a blow off top. And I've started saying on Twitter, like, we might see a $100,000 candle if this really starts to get out of control, which I don't think most market participants are ready for.
That's a good observation, and no, they're not ready. I am most certainly ready for a $100,000 candle, but I think most people are not. Okay, so back to your the Fed's balance sheet, fantastic. I've always contended there's two sides to this. There's the supply side, which the supply shock does create by itself, that any other outside factors will create kind of this supply shock that gets set into the market, because not enough participants understand it's not forward priced in, and it might not be for another several years. We don't know how long it'll take for the market to really properly forward price this in. It will at some point, but it's not currently, obviously. Right. But the other half of it is macro conditions, and the monetary condition is one of the biggest macro. How much money is being pumped into the economy? That has a huge impact with the debasement of the fiat value of the fiat base is a significant factor as well. So that's very good that you have this note on here. I would say it's a significant factor, clearly.
Yeah, and it's got some colorful commentary that just makes me happy.
Just kidding. I like that. That's my favorite part.
They like to tell us that they're going to stop printing, and then they either break something or, they just decide, never mind, right? But you basically had the repo market break, and then COVID started, and the balance sheet just went. Like, people think this is a big move, but the thing is that this curve is an exponential curve on an exponential graph. So the amount of money has to get more and more unbelievable for us to not break the system with liquidity crises and insolvency crises.
Well, and the sad truth is, just for us to keep track of this madness, $100,000 Bitcoin, that's a double from here. That's really, we're just barely maybe staying just a little bit ahead of the curve at those levels. That's what's crazy to think about it.
Yeah, yeah, we're destroying the real economy as we're shoving more and more money into asset prices.
Exactly.
So, but yeah, this isn't a Federal Reserve paper. This is a price by blocks paper. And so basically what I was able to do is print out the price by blocks, and a big thanks to the root, who, he didn't give me any code. I really wanted his code, but he gave me the API and he gave me the idea of how he was basically combining the data to print x-axis blocks and y-axis price, and the algorithm that he basically uses. So you can kind of see it here, right? Like, it's that whole idea of, we came into price discovery and we've been in a channel ever since. I mean, you can really see it when it's on price by blocks. And
clearly
there's a lot of, yeah, there's a lot of cool ways that you can print price by blocks. And this is kind of the way that I've been looking at it. So this is from September 25th. And we can also take a look at it today, but that has some extra lines, so we'll come back. But basically you can kind of see that the peaks of the 2013 cycle and the 2017 cycle do not line up one-to-one, right? If this point and this point were in the same spot, that would have been great, because we just sell at block number X and we come back in 4 years and we do it all over again, or 2 years and do it all over again. But you can see when you print it by blocks, the cycles do appear to be lengthening. So
they also
what you can do,
they also take drastically, all three of them have taken drastically different trajectories. So
yes.
In 2013, you had a clear double peak. So it was a mania peak, a lot of consolidation, a mini bear market maybe, and then a second clear peak. In 2017, it was a gradual ascension with several small pullbacks. And in 2020, 2021, it was a large rolling top, a large rolling bottom, and then now we'll see what the rest unfolds. So in my assessment, there are three very unique price actions. If they're the same, it's probably going to be a similar result when it's all said and done, but there's different factors that go into it. And I think you're going to start to explain some of this that we're seeing. I think that this I think really helps to speak to that. But go ahead.
Yeah. So Bitcoin likes to do, when it goes through periods of consolidation, I would say a rolling top with a rolling bottom is almost never the thing that you see in Bitcoin. It likes to consolidate either in a upward type of consolidation, like we saw in 2017. It'll consolidate in an upward channel and then break that channel to the upside, or it'll consolidate in a downward channel, break that channel to the upside, kind of go sideways like this and continue forward, right? You can even kind of see this price move right here, where it consolidates upwards, breaks the channel, keeps going. And sometimes when the reason we take breakouts in the bull market is because it doesn't often come back and test those levels. It just goes. But yes, if you look at these two cycles and their tops, you can draw a trend line right through these two tops. And you can see when it kind of comes under this trend line in both instances, that's where you really get your mania phase, which I found super interesting, because while we might go higher, there could be a point where we're sitting up here at maybe $150,000, $160,000 and doing a rolling type of move like we saw here. But instead of going down, which a lot of market participants would expect, I think we'll actually hit under this line and we'll start heading higher in our mania, like that will kick off our mania phase.
That's a very interesting observation. The one thing that I know that we can all bank on is that it's going to do the unexpected, and it's going to be very difficult to get to understand what's happening in the moment. And so this type of analysis can hopefully give us the clue to lead us to the right conclusion at that difficult to understand time. And that's been, to me, that's been the hallmark of this bull market. it has been difficult to understand what is going on. And that's going to continue to be the case, in my opinion.
Yeah, I would agree. I think you get market participants trying to match the prior cycles to guess what's going to happen next. And that when everybody is doing that, you end up, the market doesn't go in the direction of the majority consensus. Very rarely does it do that, right? So trying to, like, long term, we can kind of assess this trend line and say, okay, well, maybe we'll get this last part, but maybe it'll be later than we thought, where the diminishing return people who are kind of expecting $100,000, they're wrong. But also the people who think that we're going to go parabolic and then, you know, crash down in December, they're also wrong, right? And what you can actually do, I just put these lines on here because I wanted to just look at the chart and be able to assert that, yeah, so this cycle from a block-based perspective is not an average of the two previous cycles. We talk a lot about cycles being an average, and I think it's important to frame it more up in the fact that there's volatility to the upside, volatility now to the downside, and then we're kind of in an average of consolidation when you look at this period of time and you look at this period of time, right? We're somewhere in the middle, especially now with price going higher.
I have a huge observation about this chart, a humongous monumental one, a light bulb moment I just had, which is like blowing my mind right now. So when you look at it on time-based, I have my charts all on time-based, and it appears that the 2013 cycle actually drops at the exact same quote unquote time that the 2021 cycle dropped. But looking at it on a block-based model, you can see that the price started recovering at the end of summer on a block-by-block basis at the same time that we had the peak of 2013. So
and check out this 2017 chart, right? This top right here actually caused, right? You can't say caused, right? But the price fell. You went into one of your 30% corrections during this period of time.
But it did the inverse in our cycle. It went up on the block count at the same time that the other one crashed. I've been expecting, so the other small piece, I haven't talked about much about this in my channel because I haven't had time to really get to the bottom of what's going on with it. But I had it marked on my chart, my BLX chart. I have it marked that we had the big correction downward right around the same time that the 2013 cycle peaked from days to halving. And then and the days to halving is literally mid-October as to when the 2017 cycle peaked, from days to halving to the peak. And so I was trying to, I've been trying to grapple with, are we going to see a big increase in price right at the same, peak time frame, days to halving, or are we going to see like a big 30% unexpected correction at that date? What you have on your chart is actually further out by blocks. So there is a discrepancy. Now we're getting to the point where there's been enough days that the discrepancy between blocks is starting. Like early in the cycle, there was very little discrepancy, right? You have, your blocks and your days are going to line up really close. The further along you go out, the further discrepancy you're going to have in a block-based versus a time-based timing. So I would be really curious to see if you could like reverse calculate from the days back, like how many blocks, delta is there between our cycle and the 2017 peak? How many blocks was it that the 2017 cycle peaked, and how many blocks are we currently? Like have a block countdown so we can be looking at. Do you have that?
Something like this.
Is it
so this blue line here is if you take this cycle peak minus this cycle peak, and then you add it on.
So, I'm talking about as we approach the orange line, if we could have like a countdown, like website with a countdown of like we have this many blocks. How many actual blocks is it? 75,000 blocks from
79,000 blocks from the halving.
So that's this 2017.
So you can.
How many blocks are we from having currently?
I do not know. I'd have to go take the current block number and subtract
the halving block numbers.
Yeah,
that's what I'm getting at.
times
Is
3.
how many blocks away are we from the 2017? Because something is probably going to happen when we hit that same block, and when we hit block 79,511 from halving to this cycle. I don't know if it's price go up or price go down. Something's probably interesting is going to happen there, though.
But you could probably do something where, like, I don't trade options, right? But with this knowledge, you could go buy a bunch of calls and a bunch of puts.
Yeah, like a theta
just
game,
knowing
like
that there's going to be volatility on that block.
Right, just play a straddle.
And you could just bet on the volatility.
Yep.
30% up or 30% down or something like that.
Yeah,
from wherever you are.
You want to play an increase in theta, so that would be an interesting play.
Yeah, but we'll come back to what you're talking about. Well, we'll come back to what you're talking about, where, like, I do have an updated chart, but we need to get through this because otherwise it's going to have blue lines on there and we're not going to know what these blue lines are.
Okay.
So this is just statically printing out how much further this cycle would be if it was this cycle minus this cycle added to this cycle.
Okay. Yep.
So that comes in right at block 96,000-ish. And this is if it's by percentage. So this is this cycle divided by this cycle times this cycle. And that comes out to block 104,000, which makes that kind of sets your range here. And that range is straddling block 100,000. And our mid-cycle top was at block 49,800 and something.
That's crazy.
So you could,
top, literally mid-cycle.
Right. You could say, well, that's where, when I was looking at this and I was like, it's at 100,000. And I just happened to be looking at this white line and I was like, oh, hold on, wait a second. This could be our mid-cycle top and this would be our full cycle peak.
That would be right. That would be astounding if it played out like that.
I mean, at that point, you would have to.
Most market participants are not looking at this. So this would actually make sense for you to have stumbled on the key, because very few people are looking at this.
Yeah, I think the more the price action plays out, it's like we got a strong bounce out of here, and now we're like, we're sitting around here, and I'm like, everything's right on time. Like, here's the update, right? And you can see we're getting this bounce. Like, I'm kind of, if you're just looking at this chart and you just go from this point to this point, right? Like, suddenly this cycle makes a lot of sense, especially if you're looking for it to end with a blow off top.
Yeah. So, and you can see it's playing out right now. I think those of us who are more inclined to look at the TA for short-term trades and mid-term price action, and we're not entirely looking at just the cycle modeling. I'm noting, the rolling top that we had, and then the rolling, I'll call it a rolling bottom. There was a very Wyckoff top, Wyckoff bottom. Clearly the Wyckoff people nailed it on this one. But I'll call it a rolling top and a rolling bottom. Now we have resistance to work our way through, and most likely we're not just going to blast. We're not in price discovery, and so it's a very different market condition. Now, of course, there's ETF or some kind of news could eviscerate all resistances. That's not a problem. That's not a thing.
Yeah, but I mean, you look even at 2013, right? Like, here's where you could say you have your biggest resistance just from this big blow off top, but this is like a one-day thing, and usually if you can chew through most of the price action. The top isn't actually what causes, right? Because people get excited and they're like, we're definitely going above all-time highs. But you can see consolidated right under
that resistance. And you had a little dip as you came into, I bet if you drew like a daily or weekly resistance from the left all the way over, that little first dip before the last.
This guy?
No, the one over to the right. The big bump up, keep going right underneath your chart. That little bump up right there, and that little bit of reset, go up. Right there. Yes, that probably came into, it wasn't quite the exact peak, but it was probably like a weekly resistance level. Like the top weekly close is probably what that literally came into, sold off a little bit and then blasted through. But we have not 1 week's of close, we have multiples to chew through. So we're going to have 2 or 3 little wiggles in the chart like that to get through this price action. That's the likely outcome.
I don't know.
We have more.
I'm more tracking where I think we're going. So to frame this for your channel, I have only taken, there have only been 5 or 6 days where I've actually made a trade. And I try to use the principles of trading to manage my risk rather than trading on leverage. My first leverage trade was actually right out of this, and I took profit into the most important line in crypto. So I am not day trading. I'm not quitting my day job because I own Bitcoin. I am using this more as an investment and planning on selling somewhere around 15 to 25% of my Bitcoin at the top. And then if we get into some very overextended levels, I have some automated sell orders just because I'm trading on Kraken. And I know that that market's very illiquid. So I'm hoping that I can take advantage of illiquidity to the upside.
So the wiggles, the reason I brought that up was not necessarily for active trades, although one could probably, you know, we'll be able to probably do something if you're really short term, if you're following somebody like Keith or something. It was more to the point is that it's going to take time. It's going to extend the cycle, because unlike in 2013, where there was probably one maybe week close and a very few number of buyers who actually bought above that price action that are then looking to sell at a break even, we have a much larger volume of buyers who bought from January through April, and several more resistance levels of where roughly the areas they bought in. And, you know, maybe they at least they weren't impulsive and sold at the bottom, but they're waiting to sell at break even likely. And so you're going to have a lot of that. That's what creates that overhead resistance. And to your point, the point I'm making is that when you have that overhead resistance, it takes time to work through that, to work through the people that are trying to sell at break even at those levels, that bought at those levels, before you blast. So it can happen pretty fast, but it's not going to go straight through. Most likely, it's going to have to work its way through those resistance levels, and that's going to push that time, like you're talking about. I think it's going to push an end of the year peak if we get a blow off top, which I'm not certain we get a blow off top. We might have another rolling top for the top of this market. But if we were to get a mania blow off top, that peak might not be as soon as people think, and it could be. It still could be. Like an ETF or something could absolutely eviscerate all this resistance we're talking about, and we simply go off to a blow off top by the end of the year. So there are forces, but without some external force, the price action is very bullish. Things are looking good, but we have some resistance to work through before we re-enter price discovery, which will then set off this mania potential blow off top.
So I kind of think that I think we're going to break through these levels pretty soon. I think as we approach 100,000, we'll slow down, and I think when we hit like the 160 mark, we'll probably do some pretty violent consolidation in that area. Like that's if I were forced to kind of say what I was going to think. I do think that maybe we'll come down just one more time a little bit. I think we'll break above. We might come back and test it, but I think we're kind of heading for 100,000 or higher in the December timeframe. But I don't think we're going to hit those CTM blow off levels personally by then. If I just had to guess what was going to happen, right? But it's a market; you never know. We're going to follow price.
I don't see a 30% correction coming until we break the all-time high. I see lots of little 5 and 10% consolidations as we work our way through it, and then once we break out, we'll have some big move, and then our first 30%, correction, and then we'll continue. But that's the likely scenario. Again, for anybody watching this, if you made it this far, you're a saint. We've been babbling on for a while, but this is not financial advice. It's just Michael and I chatting about his awesome work and some fantastic insights here, and I hope you guys are enjoying this video. So, Michael, back to you.
Yeah, so if you look at where that range is, it actually comes in at block 96,000, and that's at the $302,000 mark, and block 104,000 is at the $632,000 mark. that's right around March 9th and April 9th, if you assume that each block takes 10 minutes. So this could be date-wise, could be sooner, could be later by, you know, two weeks or so. But we're talking about some pretty ridiculous price levels.
I vote for April 9th, 609,000. That's what I vote for.
In terms of ROI, you would actually be right in the middle of your previous two cycle tops, which I thought was interesting. You'd be out later, but you'd be right in the middle. I think this is like anywhere from a 72 to a 32 ROI.
Yeah.
33 to 72. Yeah.
Yeah. So, and, you know, I think the people, the diminishing returns crowd is likely going to be true over the long term, but we're still in an exponential growth phase. So that's, and the other part of it is, like you brought out the Fed's balance sheet, the monetary conditions. There is a lot of reason that we should actually outperform the 2017 cycle.
Yeah.
As crazy as it sounds, there is a lot of validity behind the concept that this cycle might actually outperform, and then future cycles might start to have the diminishing returns. On the super cycle front, I don't know if you have anything on this. My personal thought on the super cycle is less downside in the bear market is what the super cycle is going to be. Not a change in the peak or anything. It's just going to be a lessening of the bear market as the market prices in the next halving. Do you have? That's just a random thought.
I don't think the halving is priced in, and I don't think it's going to be priced in next time either.
Yeah, I don't think next time. It's a possibility. Go ahead.
So if you look at what happened last time, right? The halving tried to get priced in, and then it got faded. Right. So I
did not know that.
Well, I mean, this is the accumulation phase, right? But this is a downward sloping channel that ended in a liquidity crisis, right? A black swan.
Yeah.
But
it was downward sloping. Yeah.
Yeah. I mean, at this point, you were just in a downward sloping channel, and there's no reason to think that it would have been that different if we didn't have this liquidity crisis. Like, it could have continued down, and then you break out, you test, and you go for this. Yeah.
It's my assumption that we won't know that the halving is being priced in until we're in the midst of the bear market, and we're all looking for, like, say we're looking for a downside of about 50 to 100,000, right? So if we get some crazy price, actually $500,000 top, $50 to $100,000, you know, bear market bottom, capitulation bottom, you know, what? So you might have a capitulation bottom.
So would you? Yeah, I do. I actually we'll go to that in a second. But I mean, if we were at 14,000 in, I think it was July 2019, I think most market participants would have said the halving is being priced in here.
And then it went down.
This is. Yeah, and then it went down.
Well, right? I'm looking at like literally as we, that's exactly what I'm talking about, is as we come into the halving, like literally the 3 months or so leading up into the halving, if price is going up and not going down, then we know that, okay, maybe this is the midpoint of a super cycle, because the halving is now being priced in and it is mass adoption. Bitcoin has reached mass adoption.
I see what you're saying. So personally, what I think is happening, so I plotted through the bear market lows, and you can kind of see this is squeezing, right? So I don't think I think a lot of market participants that are saying lengthening cycles, I think what they are going to learn, if this ends up playing out, is that we have lengthening bull markets, bull markets with no diminishing returns, along with sharper, more violent bear markets that are shorter. So a lot of people are saying less extreme bear market, come into the halving, you know, kind of where we expect. And I think because of what the Federal Reserve is doing, and the next time I think they're going to break the system, which is July, I think that as they're tapering, the Bitcoin community is very good at, the people who have a lot of money in Bitcoin are very good at tracking what the central banks are doing. So like this 2013 cycle, actually, the Fed started tapering like here, like right before the top. And then in 2017, the Fed was, I mean, this whole cycle, I think that's kind of why this was a more muted marching cycle. than like a double wave and very volatile price action. But like this was when right near the top is when the rate of tapering was continuing to increase. So I think maybe a lot of people who were watching the Fed's balance sheet were expecting them to stop because it was going to break things, and they did not. And I think if you look at when this capitulation event happened here, it's very close to where the dollar system was going to break because they were tapering too much. So like if we come up to here, every time that they go under this exponential curve on an exponential graph, they break the system. And like I said, they cause a liquidity crisis. So if you're holding Bitcoin and you're watching central bank balance sheets, right, like you see what's coming. And even now, right, like we think what they've done is so extreme, but if they taper, it's going to flatten out and we're going to get another liquidity crisis. So that kind of falls in line with my thinking of a sharper, more violent bear market on the downside. Because
I'm going to tell you this, Michael. I read your paper and I read through it. I got 5% of our discussion so far. I got 5% out of it. Like I've gotten way more out of our discussion.
Yeah.
I just like reading it is not doing the same as you explaining it. So thank you for explaining this. This has been very, very eye-opening and fascinating. Some great work. Wow, I really applaud you. This is fantastic work.
Yeah, so the other thing that you can do, I only did one. I think this is a static line for the bear market low. I don't know if you saw Miles's video, but this puts the bear market low at 62,000 62 to 72,000. I did do both sides around January 1st.
That's
2023.
That's pretty much roughly what I had in mind. Was like, yeah, somewhere I had 50 to 100,000 is a very broad range, and I was thinking the end of 2022, the beginning of 2023. That's right in line. Okay.
Yeah. So this would be a later capitulation, right? Because like, and it kind of makes sense that each top and each bottom would be slightly moved to the right, because you basically have to get every market participant believing that you're never coming down again, and you have to get every market participant believing that it's never coming back. And so it kind of makes sense for it to take a little bit longer each time. And then in order to have these capitulation events, you almost have to have price falling faster than the previous cycle. So from like a market psychology standpoint, it makes a lot of sense to me for that type of price action to play out. So it'll be really interesting if this ends up nailing the bottom of the bear market low too.
If it does, it's going to be you're going to be a well-known person.
Yeah. Yeah. Well, I think this is really I did the work of plotting it by blocks, but I mean, Jordan talks about that hive mind that CTM has, and it really is like everybody else's work helps me formulate better ideas. And I've heard it from other people where they're like, okay, the things that you're saying, I'm going to take that and I'm going to go think about it, and I'm going to come back with some seriously cool stuff. And it's just this huge feedback loop that's been absolutely amazing.
It's been fantastic to observe, yes, and the work that's been put in. That's everybody who is a part of this and benefits from it. It's the whole community is going to benefit greatly, but those who put in the most work are going to deserve every bit of what they get out of this market. That's sure.
So if we did have what you were talking about, and we just kind of sit under here, right? Like, and we don't have to top out at just 100K. I was just looking at like other perspectives in the market. So we've got like Benjamin with his lengthening cycles and
diminishing returns,
logarithmic regression bands, right? So there's no reason that you couldn't use this to kind of supplement that work. I just wanted to make it clear, obviously not my base case. And then we've got the CTM Meta model as adjusted from the halving, which I think is this might be adjusted from the mid-cycle low.
That's the one adjusted for the mid-cycle low, right?
But I did point out in this paper that, like, you know, we were adjusting for break of the all-time high at this point, right? And clearly we had to exit our positions because we realized here, well, I realized here that something wasn't right, and that I didn't sell my Bitcoin, but I did sell my altcoins, and I actually waited in cash and then flipped it into Bitcoin down here. So, I mean, obviously Bitcoin crashing is a good signal that you probably don't want to be in your altcoins.
Yeah, exactly. Well, this is why at the top, I remember I talked a lot about this. I very heavily rotated from altcoins into Bitcoin, but the key indicator was the Bitcoin dominance chart for me. And the Bitcoin dominance chart will rise for two reasons. One, Bitcoin breaks out and just goes haywire, and all the alts bleed into it. Or B, the whole crypto market rolls over, and then same thing happens. It helps you manage your downside. If you're in a real area of uncertainty, you start to roll over like that, exiting your altcoins and or rotating your altcoins into Bitcoin, just so you have less of a downside, and it's easier to manage your risk through that event if you're heavy in Bitcoin. But that's just an observation. But yeah, smart on you to do that for sure.
Yeah. So here's just another example of what I was looking at the time I'm writing this paper, right? Like, people are in fear, right? And we have the break of the most important trend line in crypto and a descending bullish wedge, right? Like, that's what I was looking at the time. And then this is just kind of to show what does my work look like on the CTM Meta model. I don't know if a lot of people on your channel use the CTM Meta model or not.
Well,
but obviously it's something I look at.
CTMers obviously do. There's have a handful of people that are big proponents of different altcoins that I don't think are too terribly familiar with it.
Sure. Well, so basically I was writing that, this is not a super confident market. And even if this were to flip all the way to extreme greed, let's say, right? Like, if you're at extreme greed and you haven't broken the all-time high yet, I don't want to be leveraging it in extreme greed scenarios where we haven't broken the all-time high. So like you said, I think we do have a little bit of bouncing around before we eventually break up. And then maybe in sometime in December, we might roll or top out and come down. But I think we're actually going to end up holding 100K in maybe late February. And at the point that you resume off of 100K, I mean, people are going to be saying this is the last time you ever had a chance to buy Bitcoin at $100,000, right? And then you go right into your mania phase.
That's a very good point. Yeah, all the chatter will be, hey, we're above 100,000. We're coming into 100,000 pullback this last, and once it starts to resume off there, you're right. The talk's going to be, this is the super cycle. We're going to $1 million. And you know what's really could feed the super cycle talk is if we have a slightly lengthening cycle, and we are into 2022, and everybody was expecting that top in December, and it just kept trucking. And now people are like, oh my goodness, it's going to go through to December of 2022, and it's going to be $1 million.
Did you see they just pushed the default, the drop dead date for the federal or the U.S. government? They extended the deficit ceiling, debt ceiling. Yeah, that thing that doesn't actually exist, but they still pretend exists. But I think at that point in December, they might actually say, we're just going to suspend it for another 2 years because we can't get consensus. Elections are coming up. This side of the aisle won't work with us. So they kind of have cover on that. And it's like the politically easy thing to do. I don't see any reason for us to expect a debt ceiling to be set ever again. So if you look at the stock to flow, I mean, you can kind of see when you get your first wave, it created like this little peak here, and you end up going above it by a lot. But more interestingly, you get this little peak right here, and you end up exceeding that also. And so now we've got this peak on the chart of stock to flow, and that comes in, somewhere $300,000, $400,000. So it was just something I observed, and I think that we probably will exceed this peak here again, just because that keeps happening every time you get these like volatile consolidation I don't know what to call it, but I just thought it was interesting. I think we're going to end up going higher than this white line here, just because that's what we've done before. The chaos model, I don't know if you're familiar with that from Ken.
I am very familiar, yep.
Yeah, so he basically did a version of what I did, but his idea is just he uses date time. So I have actually asked him what he thinks about this, but I don't think he's gotten a chance to read through it. So maybe I'll send him this video link and be like, all right, you don't have to read words, I'll just tell you. Because I'd be interested to see what he says. And like, if he was like, oh yeah, it would make sense to move this date back a little bit and measure it by blocks. Because our price targets are actually very similar.
Your dates are similar too.
Well, he's in May. He's in May 25. He's like end of May. So I guess what I'm worried about for him and his community is that he's going to think it might keep going, or worse, maybe he sells and his community doesn't sell just for whatever reason, right? It's going to be absolutely insane at these levels. Mm-hmm. So just making them aware that, hey, we might actually see it like here. It would be cool.
April. So you're at April, right? Yeah. So the peak might
April
be
9th to March 9th. Yeah. And then Greg Foss did a paper on, he did do you know who Greg Foss is?
I've heard the name. I don't know him as well.
So he's like a big time bond person. So he frames Bitcoin from the standpoint of Bitcoin is insurance for bonds globally.
So I've seen references to his work.
Yeah. So he basically says like the minimum that it would be like $160,000 and it's trading at 42. Like, what are you guys doing? And then I assigned just some arbitrary, probabilities to different price levels that I think are reasonable for what Bitcoin's top price could be as I see it today, right? So like giving 12 million a 1% chance as of today still puts the fair value of a Bitcoin at $100,000. So basically when you add up these probabilities in terms of price, you get like a $584,000 Bitcoin. But that's very subjective. So like, that's just my personal belief, but anybody can do this, assign probabilities of outcome, assign some numbers over here and calculate what you believe Bitcoin is worth today. And I think most people who own cryptocurrencies would find that the number is way higher than the current market price. So yeah. Oh, this was fun. So like, if you actually just extend this out, these two points converge at $10 billion of Bitcoin, which I thought was fun. So if this ends up actually like playing out, we top off on this line, we bottom out on this line. I mean, like that would just be, to me, that's very insane. I'm sure it's a coincidence, maybe, or maybe it's not.
That would be rather insane.
Yeah.
That was not a coincidence.
Right.
But, remember what did Hal Finney was extrapolating out? Would he come up to like $5 million per coin or something by, I forget what date it was. Yeah.
Oh yeah. I mean, like Fidelity said it was going to be $100 million a coin.
Yeah.
Right?
Well,
and if they had somebody who did this, right, maybe they're seeing the same thing.
Here's the truth of the matter. By the time we get to those levels, it won't be any amount of dollars by the coin. It'll just be, how many Satoshis do you have? That's what it'll be, because it'll have replaced whatever fiat was. It'll be infinite. By the point it's actually at that price, it'll be of infinite value, because in comparison to fiat, because it'll be the reserve currency that most people are using in their head.
Yeah, exactly. So just really quickly, what I wanted to do was maybe we'll use the brightest one here and we'll make these dark just to kind of give people an idea of like, maybe we'll keep this one, we'll get rid of. All right, we'll keep this one, that's fine. So we're just gonna, one of the other reasons that I think this makes a lot of sense is just because, so like, here's the cycle low, right? on our CTM Meta model. And then here's measured by the halving, right? You move over. Here's our prior break of the all-time high. Here's our mid-cycle low. So like this chart keeps moving to the right, right?
Mm-hmm.
So if it keeps moving to the right, why would we keep saying, oh, well, now we think the peak is going to be here. Oh, now we think the peak is going to be here. Now we think the peak is going to be here. Like, why don't we just move it to our best guess and like work with that? And so when you adjust for price by blocks, what you actually get is this.
Holy cow.
Right. And you can actually see. So like one of the things that I've brought up, and I wish there was a way to do it, but like imagine these two charts stretched, where you start from the halving and then you stretch the price action out to where you think you're going to end up topping out. Like we might have actually hit the top of this if this were over here. Right? Do you see what I'm talking about?
No.
We're like, okay,
the top of the first peak of 2013 would line up. Is that what you're saying?
Yeah, I'm saying that we might, if this were stretched, we might have actually realized that we're hitting the top of this price action.
Yeah, I see what you're saying
at the time, right? And if these two models were stretched out back to the halving here, right? Because I have to move it over to the right. So what I'm looking for is for price to play nicely either in this range, or I'm actually looking for it to, like, if it broke out above this range, I would not be concerned just because of what the Fed is doing.
Mm-hmm. Mm-hmm.
Right? If it broke out above this range, I'd be like, well, cool, we kind of broke out above the range earlier in the cycle. I don't see any reason it can't break out again before either reverting to the mean and coming back up, because I don't think the Fed, like, not only is the Fed currently not tapering like they're talking about, they're actually accelerating their asset purchases by about a difference of like 29% to whatever their previous quarter percentage growth was.
Well, the recent jobs print's going to cause them non-farm payrolls. That's going to put a real damper in their any plans to taper at all.
Right. I mean, this game keeps going so long as they can slow the velocity of money while they shove more money into asset prices. So, I mean, that's their big formula. Money supply times velocity gives them a magic number that they want. So they're trying to do things that slow the velocity of money so that they can continue to print more and shove it into asset prices until we get to our central bank digital currency. So yeah, I
feel like we should start a separate conspiracy channel, because I was about to add some stuff. I'm like, I'm just gonna let it go. That's it. Yeah, I mean, I agree with you that we could like go off on. I could go off on a how the system is orchestrated tangent, but I just did that the other day. I did a truth episode that literally went off on all that. So I think thank you, Michael. It's very good, insightful comments.
Yeah. No, I mean, yeah, not saying it's right or wrong. I'm just saying what I am seeing out there. And let's see. So we don't need, just for those of your those people on your channel, right? This is having one's price action plotted out onto this cycle. This is having two's price action. So 2013 cycle, 2017 cycle, and then our current cycle in white. And then this yellow line being
the most important trend line. Yeah, the
yeah,
breakout.
Actually, that's like a little, yeah. That was like a little line that I just had on there.
So what Michael's referring to, this is something that Jordan Lindsay's Conquering the Markets kind of pioneered, was the idea that there's a definite early kind of peak in the Bitcoin cycle, and there's a pretty big shakeout event in both 2017 and 2013. Really, in 2017 there were kind of two of them, but there was a bigger shakeout in 2017. And when you draw a trend line across that downtrend pattern after that first breakout, when you break that downtrend is when the next big wave of money flowing in. And we had three touches of it. We had two touches, the big sell-off, a third touch, a small correction, and then now we've broken out, off we go. And then you see the other two, if you draw a similar downtrend trend line, same thing. When you break that, if this big dip You know, you can see him clearly in the chart here. He's got those two big dips, the big dip here that come in the summer, and the two big dips, which I also think came toward the similar timing. But
yeah,
those
so the low has always been in July.
Yeah, that really deep low is at the end. There you go. It has always been at the end of July, and when you draw a trend line across that, when price recovers from that, then it's kind of it moves up much more. I'll say rapidly, for lack of a better term. That's exactly what we're seeing now. We broke that trend line. We're seeing we saw a price appreciation, a little bit of resettling, and off we're going again.
Right. Yeah, and so if this cycle were adjusted from the halving, I guess I could just move it over and then undo it. Oh, not that. So this is just, you can take this arrow here and just bring it from peak to peak. Oh no, this is adjusted by blocks, but basically this is just showing like, hey, we've got a decent amount of time, even if you just printed since the halving, right? Like this cycle peaked much earlier than this cycle. If you're strictly looking at when did the halving start and when did we get our peak, right? So it's not so crazy to me to think that, hey, this arrow is probably going to be, oh, not that. It's probably going to be somewhere out here. And this is just the price by blocks range. So you can kind of see it. I mean, it's lining up nicely where we could get kind of a move up here. And like we hit the top of this model, we came down, we kind of come up, we hit the top of this model, we come down before resuming back up.
That makes a lot of sense. I haven't seen this very dynamic. The work you've done within TradingView is impressive, and lining and adding the block base to all this.
Yeah, so just trying to see if there's anything else, right? And then I've got my price target. It's kind of crazy because like originally I was looking at, so what I'm looking at right now for our next move higher, and the reason I think that we might go higher sooner is we've got this is like my new most important trend line in crypto. So this is where we broke down against the NASDAQ.
Oh, the NASDAQ line. Yeah.
Yeah, so this is my NASDAQ chart, and this is actually resistance. But yeah, so I'm looking for a break of where we broke down. But you can already see if you're on the most important trend line of NASDAQ, Bitcoin, like you're above, right? You could, I guess, if you really want to, bring it like this and really kind of tighten it up, right? And you could say, oh, we had a fake out, right? Now we're under, we might consolidate a little bit more and then break it. So that's kind of like what I'm looking at right now. And like, I have stop loss by like leveraged buy orders here if I'm wrong. Obviously they have stop loss, right, associated with it. But like, if we break this line right here, and I'm probably gonna take it because I haven't taken a leverage trade since we made this move. I think I took profit right about here or something. Maybe I think it was this one, which was, it's always hard when you like, I can't say always, I've only taken one leverage trade, but it was hard to watch this happen. It go higher when you've already taken your profit.
Did you take the break of the trend line like what we do? Or did you have some other metric you're looking at?
I actually leveraged in right. I leveraged in like here.
Yeah, so you leveraged in. You leveraged in when I went all in on spot. You leveraged in. Yeah. And then I leveraged in a little bit above that. So that hit of the most important trend line, when it came down, when that downtrend broke, that's where I went leveraged, and I took profit. Very similar spot to you. When we broke the breakout, so there's a breakout uptrend. We broke that breakout. I took profit. Similar setup, but I had a bunch of money sitting on the sidelines that I went all back in on that bottom. But yeah, you went leverage. Yeah, very good.
I was fully positioned by like here. As I think I put the last of my money in here, and we had been in extreme fear for like a month, and I was like, I'm gonna take this break. Like the next time we make a higher high, I'm going to set a leverage. I'm going to set my loss here, and we're going to see what happens, because this is I was dumbfounded that we did this. This was like a gift to me, at least. I couldn't believe that we were continuing to go lower for months on end in a bull market. And like earlier, I think we talked about this, like we were both looking for a quick bounce and down if it was a bear market. And when it didn't do that, I was like, this doesn't feel like a bear market. Yeah, this isn't a bear market anymore.
Right.
This is a bear trap / a capitulation, like a mental capitulation.
It was a mini bear market. It was more of just an epic shakeout. I mean, I think the purpose of that was orchestrated. It was partly orchestrated, but there was a black swan event that actually caused this. It was when China, the world's largest, the majority of Bitcoin mining, when that country shut out all the Bitcoin miners, there was a legitimate reason for that, and it created the biggest shakeout we've ever had in a bull market. Which another weird thing is it could create the biggest bounce back we've ever had in a bull market too. Just a thought. Yeah,
absolutely. So you said a lot of your folks like altcoins. So here's my Bitcoin.
Yeah,
altcoin channel.
We've got some altcoin zealots that have their favorite projects. There's a couple of
okay, well, I've got some really bad news for them.
Bitcoin's about, I tell them all the time, Bitcoin's about to crush them.
So here's the end of alt season 1. And you register a pi cycle bottom. So this is actually Julian who showed this to me. And then here's the beginning of the bear market. So I think if you go to like the ETH BTC chart, so like what's this date? This is 23 September 15. I mean, close enough, right? Like it's about, I think he said it's like 10 days later, you peak out on alt season 2 and then you collapse. So it's like a good time to be looking for price action that gets you out at the top. And what you can see now is that we're approaching a potential pi cycle bottom.
Right.
So I just put some lines here. That's my
interesting that you have that all the way out. So like we had this big down move in Bitcoin dominance was alt season 1, and so you're looking for the bounce back on the Bitcoin dominance not to happen until December.
So I'm looking for Bitcoin to be right, because Bitcoin's in this resistance area right now, right? So I also don't see any reason for money not to continue flowing into this market, right? But it might take us a little while. Even if we break out, we might come back, we might retest. And I could really see altcoins performing very well while people who are in the crypto market start to realize this isn't a bear market. I want to position back in alts.
Yeah.
And then you get alt outperformance out here, right? Even if Bitcoin's at, if Bitcoin's at like $100,000, $150,000, but Ethereum's at, let's say at 3x's, it's at $9,000, right? Something like that. I don't know the exact numbers. I guess that would be a 3x and a 3x, but maybe it's at $12,000. Maybe we're looking at like a $12,000 Ethereum and $130,000 Bitcoin. You could actually end up out here and hit a pi cycle bottom. And maybe that pi cycle bottom comes from a big Bitcoin sell-off. Maybe you sell off down to 100K or something while alts are still running and people think it's alt season. Well, it would be alt season, but the cycle's not over. And every time you've hit one of these pi cycle bottoms, you've actually gone and tested the top of this channel.
Right. Yeah, that's exactly almost the exact same analysis I have without the pi cycle on there. I've got my target place to rotate back into alts is between 61 and 57. But if we go all the way to 70, that would be fantastic for me because I'm 80% Bitcoin.
Yeah, I mean, this played out in 130 days, right?
Yep.
So here's 130 days. Like, just imagine, I guess I could mirror this probably, right? No, I can't. But imagine this is over here. and this line's over here, right? Like
Bounces back, yeah, 130 days.
right, it bounces back, and that would put the top being around April 12th, right? So we're talking like that lines up very nicely with when I think that Bitcoin will top out.
Well, you know, but the alt season 2 happens after, should in theory happen as Bitcoin rolls at the very tip top, as it starts to roll over. That's when the alts go in fuego parabolic. So we should have, in theory, so you're looking at a third, kind of a third bottom, a third touch, maybe a W pattern almost on this chart.
I think you might break down. I think you might fake out breakdown from this channel when everybody says, like, you could get maybe like down here, maybe you kind of like, yeah, you could just, I mean, this is a descending megaphone, right? Which is super bullish for anybody who holds if it breaks back out, which I think I'm expecting it to.
So you think it's gonna so we could fake out, but we hit a bottom of whatever it is, whether we bounce off of 40 or go down to 35 and then bounce from there. Right. I hit a pi cycle bottom in December, and then that would give us a meteoric rise of Bitcoin, and alts bleed while Bitcoin just goes on an absolute rampage through April. And then
I mean, this is fluid, right? Like I could move it.
But yeah, but at the end of April, yeah. So so this is just a running theory. Obviously, again, not financial advice. We're just, he and I are just bantering. This has been super interesting banter. But I can see this, I can definitely see this playing out to where, yeah, we get one more little move in altcoins, because I'm seeing a lot of altcoin setups. That's the thing. I just posted about Litecoin. I've been seeing Elrond, Cardano. They're all looking like they're wanting to break out one more time, and that's what I keep saying. Ethereum, it's continuing to consolidate in these like mini wedges, and it looks like it wants to break out. So this actually makes sense to me from what I'm seeing on the charts. Is that it keeps looking like altcoins do want to break out one more time. So I think that's really insightful that you brought this to my attention, because that makes a lot more sense as to what I'm seeing. I keep thinking that, you know, the Bitcoin dominance is going to break out sooner to the upside. But if you're right, and we get
it could be sooner, right? Like, let's say, I don't know, you get something like this, right? You've now made a higher high on ETH BTC, and you're going to the moon, and then all of a sudden it turns around on you.
Yeah, that makes a lot of sense though. So if we were to get that type of price action, and alts slightly outpace Bitcoin as money flows into the space, but then you get that huge move in Bitcoin, and alts kind of just, you know, versus USD, they're just going to be kind of just stagnant or lagging. They won't necessarily collapse in and of themselves. They just won't be keeping up with Bitcoin. And then you get that peak in April. You're going to have this meteoric, insane frenzy of very quick tops. But what I'm seeing right now is, I posted Litecoin. Let me look at Litecoin's chart right now. Litecoin looks like it really wants to bottom here and bounce versus Bitcoin, or break down. I mean, I guess it could break down. It's at the deciding point. It looks like it, you know, it could definitely break down for sure. But you've got Ethereum, Cardano, Litecoin. They all look like they want to break out. And even I was looking at Steller the other day. It's setting up to wanting to break out. Yeah. So Litecoin's right in the very bottom here, and it's getting really constricted right here. So it either needs to break down or bounce.
Yeah. So when it broke out of here, I was holding Litecoin maybe here, and it broke up, and I was also a leveraged Litecoin trade at the time that I took my Bitcoin trade. And when it broke down from here, I was like, never mind, we got to wait.
Yeah.
Because I'm looking for it to break out here and just keep going. Like the minute any Litecoin move comes back down under this, you can see, I mean, it's becomes no longer interesting. You've only ever broken back out once and you failed, right? So like, if you break down from this trend line, it's super not interesting. I'm looking at this Litecoin chart going, it either is going to break down and finally lose its correlation to Bitcoin, and that bounce it keeps getting at that level, and people just fade it entirely, or it's going to break out. I think it's going to break out one more time. My opinion of Litecoin is it's not a long-term hodl position for me. I don't hold the coin. I only trade it. It's a highly liquid asset. I watch the chart very closely because it's a very
great asset to trade with. And so if it were to break out, you're on a log chart. Usually your chart's all
Yes,
messed
I am.
up. Okay. That's why it looks totally different than mine. Like, what on earth is going on? If it were to break out, but when Bitcoin does well, Litecoin has these moments where it spikes when Bitcoin consolidates. So if Bitcoin's on a really strong up, and we saw this happen early this year, right? Litecoin was one of the ones that had a really big breakout. When was it? February. Litecoin's big breakout happened before most altcoins. So like Ethereum, Polkadot, Cardano, they all broke out after Litecoin did. Litecoin mimics Bitcoin's behavior. When Bitcoin makes a big move, Litecoin tacks along. And then as Bitcoin consolidates, Litecoin likes to make this light year jump up and then just come right crashing right back down to earth. But that's what I'm seeing setting up as another warp to light speed and then a very quick crash. That makes it, that lines up with what you're showing me on my point is what you're showing me on Bitcoin dominance chart. This all lines up.
Right. Yeah. Yeah. I think I've kind of decided just personally for the rest of the cycle, until I sell my Bitcoin, I don't think I'm going to buy any more alts, but that's just for tax reasons. When I bought Bitcoin, there's no Bitcoin that's like a good option for selling at the moment. So yeah. And then, I'm a little more, so my experience is I started trading, like here. So
you've been trading up only.
Right. Yeah. Yeah. So I am very cognizant of the fact that I am not a super experienced trader by any stretch of the imagination. And most people that I've talked to, very few people who trade have not blown up their accounts once.
So I started trading. I got big into energy after the big after the big recovery from the big crash. And I started trading energy. I think it was 2012. I really started getting it, like trying to trade energy stocks and stuff. Because I live in Houston, so I'm like around that all the time. And and I was in a down only market for like a long time. So I got to learn in only down. And so
wow.
it was tough. And so this, switching to trading crypto predominantly over equities and energy has been it's been very nice to be in an up only market with occasional bad couple of months. It's been a very nice change. This is also why, if it's just for the general context, I don't know that I really talked about this with it's just the community at large. This is why I'm so defensive at times. I'm so used to trading in down only markets where I have to take profits. I have to be very selective about my entries, and I have to be very guarded and take profits and watch my downside. This is why I'm so guarded. It's just years of trading down only markets, which is weird because that's what I was trying to. I kept trying to think energy was going to come back big, and it just kept going down and down and down, and it was a really tough, So yeah,
well, this is nice. Side. This is up and up and up and up. So.
Yeah, that's a whole lot easier. I'm telling you right now, this is way easier.
Yeah.
Unless you're shorting, like I should have been shorting energy the whole time, but I was an energy bull, so whatever.
Yeah.
All right, Michael. Yeah. Well, I think is there something else impactful you want to share? We need to probably break this up and do another session. This has been super great. So maybe we can you can give us your final thoughts here and wrap, and then we'll wrap up. We'll do another session again next week or two.
Sure. Yeah. I mean, I generally have been saying my biggest concern for a lot of people trading this Bitcoin market is that people will sell too early and too low, maybe somewhere around here, where you're really missing the majority of the move. And this part here is the hardest part of the cycle, where, I mean, this is going to be taking candy from a baby in my view, because we're prepared, we've done the work, and now we have this awesome model to follow and track and look for if this is playing out or not. So I don't know. I mean, everybody should make their own decisions, but my concern is that the risk is to the upside, and even people who have spent the last 2-3 years trading crypto are aren't ready for what's coming.
That's probably a very good observation, and thank you for that. I too, I've assumed this whole time that people are going to sell too early because it's been a long, stretch to get here, and it's going to be at a lot of price appreciation in a very short period of time. So people who have been holding through all this, especially people who held through the summer and endured all that pain, they're going to be just so happy and so relieved that they've got. So especially people who unfortunately didn't discover the community, didn't discover CTM or the crypto community at large or whatever community they're involved in, didn't discover Bitcoin until the summer, and they bought in at $40 to $50, $60,000. When they've been holding through all this pain, and they finally get above they're in the green, or maybe they double their money, they're going to be so elated by that. And I think you're very right that people are going to sell way too early, and then it's going to be really hard to get back in because prices is going to keep going up and up and up, and everybody's so conditioned to buy the dips. There's not going to be many dips to buy at some point.
Yeah.
And especially when you're used to this, we had this several months of this terrible summer sell off and everything else, and when it goes up 40%,
2022 only up.
Oh yeah, when it goes up and up and up and up, and you have these like little 10% corrections, and it's just up some more, people are going to be just left behind. So very good observation on that. I think that's a very wise. I think there's going to be a lot of people that sell at the end of the year thinking, okay, it's probably going to happen. It's just going to be a self-fulfilling prophecy. At the end of the year, a bunch of people are going to take profits, thinking the peak is going to be late December, whatever price. Any little bit of downturn, they're going to be taking profits, and it's just going to consolidate and then blast back up in January.
And I mean, you even called this a bear market, right? This is going to be called a bear market. This is going to be called a bear market. Oh, we just don't have those long drawn out bear markets anymore, right? What we have are short bear markets that are less than 60%, and then we 10x, right? Or we 3x, or we 5x, right? Like, and that's going to be what people are probably talking about in late Q1, early Q2. And then you're just going to get, a lot of people are going to get very hurt.
Yeah, and so it's the people that have, at least the people that have bought and have been holding through this bear market, if they end up selling early, at least they'll be up and they'll have been profitable. You're right. There are going to be a lot of people when we get above 100,000 and it starts to climb again above 100,000. They go, oh my goodness, it's going to hold and keep going. They're going to mortgage their house and think it's going to go to $1 million. And they're going to take reverse loans on their houses or whatever, and then it's going to be a lot of pain when they're selling at half of what they bought it at for.
Yeah, I mean, $300,000 Bitcoin puts you as in the top 5 assets by market cap. $500,000 Bitcoin puts you above gold, right? So, I mean, Bitcoin could potentially be the #1 asset for like a day if we get like a $100,000 candle, because what really a $100,000 candle is at that point is
20% move.
Yeah, I mean, that's a 20% move on 400,000.
Yeah, exactly.
And you could totally, I mean, I could see a 25% move on blow off top day with the wick.
Absolutely. Yeah, absolutely, for sure.
So that's I know you don't usually want to hold fiat, but that's a lot of fiat to leave on the table.
Well, you want to be holding the asset that is going to be appreciating the most at any given time. And so as long as Bitcoin is beating everything else, that's the asset you want to hold. As soon as Bitcoin is not beating anything else, what you want to do is you want to move to the asset that is going to beat everything else. And if it's not Bitcoin, you have to go to, generally speaking, you have to go to fiat first before you can get there, unless it's going to be gold, and you go straight to gold or something. Mm-hmm. But the point is you have to drop off the fiat and then rotate. And if all you do is you drop the fiat and you're no longer riding a depreciating asset versus fiat, that's a one way to win. But the name of the game in trading is you always, if you're not on the asset that's beating all other assets, you're losing. That's just the way it works. That's just reality. So
are you planning on selling your whole stack?
At the very tip top?
Yeah.
Yeah. I have I have 288,000. I will sell some. It's like I'll have leverage positions, so I have specific places that I'm going to look to trim and pay back my leverage just to make sure that I'm totally safe, which will at that point be a fraction of whatever the price is, right? So I'll be selling small fractions as we march up. But I'm going to do like I always do. I'm going to have my parabolic launch angle trend line. I'm going to have my weekly fib extensions. Probably for this, it'll be a monthly fib extension, looking at what's the potential, based on prior impulses, where could we be going on a fib extension level. And I'll be looking for a rollover. As soon as those parabolic trend lines start to show me that it's rolling over, I will start to trim. And then my ultimate stopgap is if we correct really hard and we get below the 120, I'll be totally out. But the 120 is going to be drug up a lot by this. The 50-day is really what's going to give me the biggest heads up, I think. 50-day moving average. I'm going to go ahead and wrap there. Thank you, Michael, so much for sharing this with us. This has been super insightful. Very great work. I greatly appreciate it. And if you guys made it this far, please consider like and subscribe. By this point, nobody's left. Probably, I don't know. This has been so insightful. I bet a bunch of people are still left. But Michael, we'll plan on doing a follow-up. And please drop your questions in the comments below, because I'm going to have a follow-up with Michael. All this we've discussed so much. There's much more obviously to discuss. Let me know your questions and comments, so that way we can discuss those in the next session. I'd like to have some comments also from the community to pose to Michael. So again, thank you, Michael. Any closing words?
No.
Okay. Well, very good. Thank you, sir. I'm going to stop recording.
All right. Catch you later.